Thank you, Governor, for agreeing to an interview with exclusively for ETNOW. Our viewers will be delighted to have you. Particularly, this is the first time that you're speaking to ETNOW, I think, after you've taken over. Well, the role often defines the man. So now that you have moved from North Block to Mint Street, if I may permitted to ask this question, it's just about 3 months since you took over, a little over 3 months, that has your reading of the macroeconomics for the Indian economy change when you look at it from Mint Street as compared to North Block? Does it give you when you look at it through a different prism, how do you see the macroeconomic fundamentals? As healthy, less healthy, much the same?
No, I don't think your prism changes, on the macroeconomy. I think the differences between North Block and Mint Street are primarily ones of horizon. North Block has a different horizon from Mint Street. Mint Street, for example, when thinking about inflation, is looking about bringing it down over whatever horizon it takes, maybe a few quarters. North Block is more focused on, say, growth numbers. What are they? And it has to be very worried about quarterly growth.
So fundamentally, your assessment of the economy doesn't change. It's just your perception in terms of the reading, the framework changes. Is that what you're putting it as?
The time frame for policies to work may differ a little bit.
Does that create friction in some sense?
No, look, there is a lot of dialogue between the Finance Ministry and the RBI. And they respect us because we are the guardians of stability, both on the price front as well as on the financial stability front. And we recognize their imperative to produce growth in the short term. I think we're both focused on producing growth in the long term, but they need to show more that the economy is growing for a variety of reasons. And so, there's a dialogue, and sometimes they convince us, sometimes we convince them. Ultimately, both sides respect each other's frame of action, and I think it's very clear that who sets interest rates? We set interest rates.
Okay. So as far as the Fed's recent announcements of the tapering is concerned, how resilient is the Indian economy? Because this is just the beginning. We don't know whether the pace of the taper will quicken, particularly because the US economy seems to have done so well in the third quarter. So how resilient are we is my first question. And what else can we do to make the Indian economy more resilient? Because what we bought is a short-term breather through our various swaps, which could turn out to be fairly expensive as well.
Right. I think the first thing to note is that the critical change that has come about is a reduction in the current account deficit. We're not seen as of now in the same boat as, say, Indonesia or Turkey. Second, important, and this we have to see going forward, is some of those countries are also experiencing some political instability, in particular Turkey most recently. But we have to show, and I hope post-election, that we are still a very stable country. So lower current account deficits combined with political stability will provide international investors the primary reassurance. Secondary reassurance is brought by the fact that we managed to raise money when we needed it, and plenty of it. There was plenty more where that came from. If we needed it, of course, we decided to call a stop to the amounts.
So there's a cost to that, right?
Absolutely, there's a cost to it.
Have you done any estimate of that cost at all?
Yes. So if you look at the swaps, now the big difficulty is estimating opportunity costs. Now, if you look at it directly, what we've done is offered a subsidized swap. So one way to measure it is what would the cost of the swap be to others if they took it in international markets, and there the notion is it would be about 3.5%. That's the subsidy that we're offering on the swap, which is $350 million per 10 billion that we raise. Now, is $350 million a year for that kind of insurance worth it? It depends on what effect it had. If you think what it did was made the rupee stronger by, say, 2 rupees, okay? That's 2 rupees on rupee per dollar is about 60, right? So that's about 3%, okay? Essentially, that means our imports were 3% cheaper as a result of this. Our imports per year are 500 billion. 500 billion, 3% is 15 billion. So we bought 15 billion worth of value, paying 350 million per 10. We got about 26 billion from the FCNRB swap. So let's call that $1 billion. So we bought 15 billion for $1 billion. Is that a good trade-off? I think it's a reasonable trade-off. Could we have done it cheaper? Of course. If we had tried very hard, using it, but we'd have to try 3-4 times. When the rupee is plummeting below 68, you've got one chance to do it. The second chance, if you do it badly, if you do the first one badly, you probably won't succeed. So you had to pull out stops and say, this time I'm now going to put terms and conditions. In fact, we had to resist, because once we said we're going to set these terms for the swap, the banks came back and said, why don't you give us this insurance, that insurance, protect us against interest rate declines, this, that. We said, no, take it or leave it. This is what it's going to be. Now, of course, in hindsight, you could say maybe we could have done it cheaper.
But hindsight is always 20/20, and you have to take a decision in real time. So entirely, so in your assessment, it was worth that insurance cost was worth it.
Well, in hindsight, it was worth it. Now, you can second guess that decision all the time.
Sure. But I wanted to ask you a question. You said, yes, on the current account deficit, we've had remarkable success. But we bought that success a little artificially by kind of putting duties on the import of gold, which has other perhaps real economic consequences in terms of smuggling, etc. And it also might have hit our, non-oil essential imports. So is it a little early for us to celebrate the fact that we brought our CAD down, number one? And the second question, you talked about political, instability in other countries. We don't have political instability as yet, but we have a great deal of uncertainty. Now, how does that really impact these two things? How do they really, what is the interplay?
Right. So the first thing is, yes, we are not out of the woods. We've bought a lot through clamping down on gold. Now you see the seepage, smuggling is picking up, etc. I think still at relatively low levels, but this is a distortion we cannot continue forever. Sure. And we did buy some time. One of the positives is exports has picked up, which is a real underlying fundamental change. Second, because of the weak economy, non-oil imports have come down, even leaving aside gold. Now, as the economy picks up, those imports will pick up, and hopefully exports, as the rest of the world continues stronger, will start resume their tremendous growth that they had before 2012. So we have to wait and see. We have bought time, and we use that time to repair our finances somewhat. But going forward, we cannot afford to be complacent. We have to, amongst other things, show that the Indian rupee is worth investing in. And what that means is partly the fight against inflation. As far as politics go, I mean, clearly the election will start looming bigger in people's minds over time. The hope is we get a stable government afterwards. But I keep saying that we cannot be complacent at this point. We have to do everything we need to do to make sure that even before the election, we stabilize on the financial front, growth starts picking up, so that whatever government comes post-election, there is a sense that this is fine, there is continuity. And this is why I think we cannot, neither the government nor the RBI afford to relax at this point. And I see signs in Delhi that the thrust towards growth will continue, and that is very welcome.
I entirely agree that yes, you have been going ahead and in a very calibrated fashion, announcing whatever you had to, but in many of the things require very active kind of buy-in from the government. Now, whether we're talking about inflation, particularly food inflation, now a great deal of the rise in prices is because government has been consistently raising the MSP. Similarly, on the fiscal deficit, oil deregulation. So at times, do you feel that the RBI is fighting the battle with one hand tied behind its back?
No, I think there's a constant dialogue. I mean, you've seen MSPs this year have moderated considerably from MSPs in previous years. I think that's part of, I think that's part of the dialogue. I'm not saying it's only the RBI, but the broader dialogue where people have seen that, okay, a continuous rise in MSPs has some adverse effects. It has some positive effects also in shifting the terms of trade towards farmers who may be some of the weaker segments of society, but you don't want to go beyond a certain point there. And therefore, this moderation in MSP growth is part of the overall dialogue on inflation. Clearly, one of the things that has happened is that the areas that have had higher food inflation have also had higher production. So prices are sort of working their way through the system in the right way. That is, they're creating a supply response. but that supply response needs to expand.
Okay. Talking about the supply response and the entire issue of inflation, at the recent BankCon that was concluded in Bombay, you had very emphatically said that you would be data driven and you're not going to allow one data point to kind of guide your decision. Yet at the the mid-quarter review recently that you had, where you announced status quo as it were, it did seem as if you're pinning all your hopes on the hope of a single data point in January and ignoring the weight of months of data which showed quite to the contrary. So didn't that seem to kind of in some way damage your credibility? Like, you're saying one thing, your rhetoric has been one, you've come out very firmly as an inflation fighter and all of us middle class people were celebrating, and then suddenly we see this man, so it seems, that's why I wanted to explain, so it seems that suddenly this man, as one paper put it, did you chicken out? I mean, did you kind of decide, oh my God, what if it does more damage to growth? Will I be blamed like Dr. Raghuram Rajan was in the past? Wrongly, it seems subsequently. That did you kind of, just when you could have gone for the kill and really put inflation down firmly, you suddenly kind of got cold feet. Did it send that signal? At any point did you wonder that did it send that kind of signal?
No, I think we recognize the possibility that that signal could be sent out, which is why the language accompanying the statement was very carefully drafted. Look, before the inflation data came out, when we sat down and wondered how we would frame policy, we said, look, we need to allow some more time. We can't do every 6 weeks something else. We need to allow some more time for the forces that we think are underway to play out and see if they're playing out in the way that we think. And so even before the WPI and CPI numbers came, we were basically saying we probably should be on hold this time unless there's a dramatic change. Let us wait for a little more time to see the forces play out, to see how this is impacting inflation before deciding our next move. Otherwise, we may go the other way, which is we've done two different steps up in the policy rate. If we keep doing this without seeing what is happening, giving some time, we may be in danger of over-tightening, and that has its consequences also, especially in a weak economy. Now, where does the disinflationary force come from? Now, there are two sources. One is, there are multiple sources. One is, of course, there's the supply effect, which is food inflation. And with a good harvest, etc., as well as with vegetables coming in the winter months, you would expect that to dampen down. But longer term inflation, we think the output gap, which is negative, that is relative to potential, we are producing far less, which means that there is some disinflationary pressure built in because of that. Now, that takes some time to establish itself. The fact that the currency has appreciated over the last few months will also play out, and you see some of the advance warning that will play out in the PMI survey data. So those are forces that should play out and should cause a reduction in inflation. Now, what are the hawks basically going on about? It is that you have to raise inflation, interest rates to such a high level that expectations will strongly be that inflation will come down. Now, the problem is that kind of discussion is based on developed economies where the expectations channel works quite well into now. In India, it is less clear that expectations are based on forward-looking, signals about this is where the interest rate is. Therefore, you should expect things to really decline. I think the output gap effects are probably as strong, if not stronger, than the inflationary expectations. In other words, I'm saying, supposing I raise interest rates to 18% today. How is it going to feed through? It seems it feeds through more through much lower demand, rather than through suddenly people waking up and saying the central bank is really serious about inflation, therefore we should all curb our wage demands, and therefore this should bring down inflation. I think both have a role, but it seems to me the output gap has probably a greater role. We want to see how that works out. So that is why we emphasized this is not a pause, this is not a stop. This is basically waiting for data. Now, when I said single data point, what we had was essentially a single data point, vegetable prices.
It's been going up for quite some time, no, Governor? It is not as if it was a single. We've had this kind of persistent food inflation now for more than 24 months. One time it was potatoes earlier, now it is onion. So it's just the trigger changes, but the basic cause.
Let's see. We will see. That is why we laid out. Let's wait a little more for a little more time. At a point like this, we have to be very responsible in how we take interest rate measures. Let us take the data fully. What we've said very clearly is we're waiting for the next round of data. And if we think that through the noise, inflation is still high, we will act accordingly. But I think at this point, when the economy is relatively weak, you don't want to be trigger happy. You want the data to be clearly telling you something. And we will act accordingly. We've said that very clearly.
Except that it seems to go way counter to what you had said earlier, that regardless of what the source of inflation is, ultimately demand and supply have to be brought in balance.
Absolutely.
So you are going to definitely crunch demand, whatever it costs to bring them in balance. It would seem. That is just an interpretation, yes.
Yeah, the interpretation can be what it is. We will not be railroaded by the markets or by investor.
No, markets would like you to keep it lower interest rate, perhaps.
There are different markets. There are bond markets, there are equity markets, there are money markets, there are analysts. Look, we raised interest rates in September when nobody expected us to raise interest rates, right? And the markets took it very badly, but we did it nevertheless. Raised interest rates again. Now, I don't want to essentially do things without thinking very clearly about it.
Absolutely, it's a very tough job.
Without having a firm basis to act. What we're doing is waiting for the next round of data. We've said again and again, we are firmly against inflation. So that should be something that as far as expectations go, that should anchor expectations a little more. But we also think the output gap effects are going to start kicking in. And we will moderate we'll calibrate our actions based on what we see. I think nobody really understands. I think we, more than anybody else, understand it. But if anybody tells you they understand the inflationary process in India exactly and this is what's going on, they're talking through the hat.
Absolutely.
People are bringing in their experiences from all over the world and saying this is what it should be. But how expectations form and what are the channels of formation, I think you cannot be very theoretical about it. And that's why we're being very practical. Let us see what is happening. We will act accordingly. We do understand that you want to be ahead of the curve. We think we bought a little bit of time by moving before anybody expected us to move. And if necessary, we will move more.
Talking about bank licenses, Governor, you've been very emphatic that by the end of January, we will see some licenses being awarded. Now, in the light of what has happened in NSCL, do you think there's a case for rethinking the decision to allow corporates to enter banking, particularly because the Standing Committee on Finance has already said that they're not in favor of it. And this entire issue of who is fit and proper is very difficult really to decide. And given the kind of extensive research and background that you need to do, is 31st January likely to kind of not be possible, will not be possible for you to abide by that deadline? And is it something that is so sacrosanct about it?
Well, first, there are two different questions.
Yeah, one is the corporate houses,
one is when, and the second is whether corporate houses. I think we should be very careful about introducing policy uncertainty. We've said here are the set of people we will look at, and that was not, that was a decision the RBI made some time back. We should look at all those people and give them a fair chance. So I don't think we change the rules of the game midstream. Obviously, whatever inputs are given, we will do due diligence on them, ask for more inputs if necessary, and we have been asking because this is one of the most thorough jobs we're trying to do. A number of government agencies, data from all over, data from the respondents themselves. We will do the due diligence that is necessary. We will not take any more time than we have to. So my intention is to give it as soon as consistent with the due diligence that we need to. That is also a statement that Dr. Bimal Jalan has made. As soon as they give us their report, and I'm telling them let's try and do this by this time, but you have to take whatever time you need to feel confident with the decisions that you're, with the recommendations that you're making. And we will act accordingly. I mean, we are very conscious of the fact that this has to be not only, actually clean, but also seen to be clean and transparent. And so we intend that to be the case. And let's see what happens. Now, I did say we will try and do it around the time of Mr. Anand Sinha's retirement. I mean, I think it will take a little more time than that, but I'm hopeful not much more.
Particularly talking in terms of corporates and NPAs, non-performing assets, your recent discussion paper that you brought out, that addresses the stock in many ways, but the flow of non-performing assets, which is almost intrinsically related to the structure of our banking system, where there's so much of government ownership. How does one really ever address that without changing the structure of banking system, getting public sector banks out of government hold, as it were?
Well, I don't think the ownership of public sector banks is the central problem. Okay. Also remember in 2007-8, NPAs were concentrated in the private sector banks because they'd gone wholesale into retail lending, unsecured retail lending, and found they had problems. So there is a little bit, the public sector banks, the problem is focused on them this time around because they went into infrastructure lending, which, whether there were pulls and pushes, it is an area of national importance, and therefore, as public sector banks, they may have gone more into it than private sector banks. This is not to say that there is no need for governance improvement. I think that public sector banks are aware of it. What we need to do is over time effect those improvements. I mean, people know the issues that are there. For example, there is a growing missing middle in public sector banks where they didn't recruit, and therefore there is a dearth of experienced people. We'll have to deal with that. There is the issue of short tenures of bank CEOs in public sector banks. There are issues of skills because obviously in a fast changing dynamic banking system, you have to acquire appropriate skills, and sometimes those skills, people have used the public sector banks as recruiting grounds. The good people in public sector banks have been recruited away. So we need the public sector banks to be able to compete on a level playing field. And of course, to the extent that there is political influence, that over time needs to be brought down. These are all actions that have to be taken. It's something that a number of committees have opined on. Yes. It is something that the regulators, are always discussing. We need to take actions that will help, I think, deal with the flow. But it is something that that doesn't happen overnight. It needs to be worked on, and I think in addition to work on the stock, it is necessary.
We've moved from a situation of growth of close to 8% or more, inflation of just about 4%, to growth of about 4% and inflation of about 8%. What can we really do to kind of reverse that order, and how soon do you see that happening? What is our potential? When will we get there? I
think we need to work on both fronts. As far as growth goes, we can't rely on artificial stimulus. There's no room on the fiscal side, no room on the monetary side. So it has to be implementation. It has to be structural reforms. I think a number of politicians across the spectrum are throwing out ideas. We should push. I think that's one on the growth side. On the inflation side, we have to do what it takes, and we will do what it takes to bring inflation down. I would say 2/3 of the action is on our side, 1/3 on the government side, but we'll do what is needed on our side.
Thank you, Governor, so much. It's been great to know that you say that 2/3 is in your hands. We are sure it's in good hands.
Thank you.